Probably a good time to get started. So as I said, welcome to all. Thank you for making the time for us. My name is Mark Whitman, and I'm the president of Lloyd's Canada and the attorney-in-fact for Lloyd's Underwriters here in Canada. It's my pleasure to welcome everyone today to, I guess, the next installment of our Lloyd's Canada webinar series. And in particular, today we're going to be featuring the Markel as part of our Syndicate showcase. So we're pleased to have much of the Markel Canada leadership team with us. So I know it's going to be an interesting presentation and a great discussion. So let me just say, apologies, sorry. Quick description of Markel here in Canada. Markel is an insurance organization that underwrites various classes of insurance, including commercial general liability, environmental liability, and professional errors and omissions here in Canada. They have a dedicated underwriting team that offers various market-leading solutions for their clients, but they also have the expertise and resources here on the ground in Canada to pair their insurance products with risk mitigation tools and policyholder services. Markel Canada operates across the country and has the capacity to conduct business in both official languages. Markel Canada is a division of Markel International, a London-based casualty insurer and reinsurer, and is a subsidiary of the Markel Corporation, which I think is really a very interesting organization, the values-driven, and does a lot of interesting stuff. Markel Canada is a Lloyd's approved cover holder and of course issues policies in Canada on Lloyd's registered paper via their Markel Lloyd's Syndicate. So welcome to everyone and the Markel team. Thanks for joining us today. Maybe I'll just launch into some quick introductions and then we'll get into our discussion. So perhaps first and foremost, Jennifer Devereaux, Senior Vice President of Underwriting, is here with us today. Jennifer joined Markel in February of 2019 and is responsible for underwriting operations focused on risk oversight and profitability. Jennifer's role includes product, process, such as underwriting guidelines, pricing, and workflow, and the underwriting team, the people. With over 25 years in the industry, Jennifer has technical underwriting and broking experience within global P&C insurance, reinsurance, and broking operations. Prior to Markel, Jennifer held progressively senior roles with major commercial underwriters AIG, ACE, Chubb, and Munich, and was part of the leadership startup team that established a specialty insurer, Arch Insurance. Jennifer's experience extends to the brokerage side as well, having worked with large commercial brokerages, Aon and Marsh. Jennifer graduated from Western University and holds her FCIP and Canadian Risk Management designation. So Jennifer, thanks for joining us today. Maybe next, let's go from underwriting to claims, and I'll introduce Jeff Smith. Jeff's the Senior Vice President of Claims and Operations. Having joined Markel over 5 years ago, Jeff is responsible for leading the Toronto-based claims team that supports all product lines across Canada, working closely with Jennifer and her underwriting colleagues. Jeff has experience handling large, complex losses and managing national teams. Jeff is also responsible for non-underwriting operations at Markel, including management and oversight of systems and Markel's business analyst team. A large part of Jeff's mandate is the development and implementation of WebSure, Markel's new underwriting and service system that was launched in September of 2020. Prior to Markel, Jeff held various positions of increasing seniority at ACE Chubb over the course of nearly 14 years, where he's involved in a broad range of commercial lines, including many of the niche casualty products that Markel currently enjoys a leadership role in. Jeff holds a degree from New York University, as well as his FCIP and CRM designations too. Why don't we go from one Jeff to another? And Jeff Sutton, welcome to you. Jeff is the Senior Vice President of Sales and Marketing at Markel. And Jeff joined Markel in September of 2020 and is responsible for sales, marketing, communications, and most field operations. Jeff oversees the regional management with a focus on profitable growth, enhanced retention, and improved broker and customer relationships through a variety of marketing initiatives. Currently, Jeff is responsible for the regions, Markel's distribution relationships and alternative distribution strategies, communications, marketing, and as I said, field operations. Jeff brings to Markel's underwriting operations team essential training and professional development with respect to effective sales and relationships management. And prior to Markel, Jeff was Senior Vice President of Sales and Marketing for Claims Pro, an SCM company. Jeff holds a degree from the University of Western Ontario and an MBA in Global Strategic Management from the Ted Rogers School of Management at Ryerson University. Jeff's currently working towards a CIP designation. So Jeff, thank you too for joining us. And then last but not least, we have the boss with us, Dave Kroser. Dave is President and Managing Director of Markel in Canada. Dave joined Markel in June of 2018 and assumed the role of President and Divisional Managing Director at the end of that year. In his role, Dave is responsible for strategic direction, oversight, and results of Markel's operations in Canada. With a career spanning almost 30 years, Dave previously served as President and Chief Executive Officer of Everest Insurance Company of Canada, where he was charged with developing and implementing a growth strategy for the startup operations in Canada. Prior to Everest, Dave held various leadership roles with Economic Insurance, overseeing field operations, including underwriting, claims, marketing, and the branch network, including subsidiaries of Westmount Financial, Matei Underwriting, and Family Insurance Solutions. Dave also served in positions of increasing responsibility at Chubb Insurance Company of Canada, including specialty commercial underwriting, personal insurance, marketing, and culminating in branch management as Vice President for the Prairies. Dave graduated from the University of Guelph and holds his CIP and CRM designations as well. So it is a highly experienced and highly accredited group with us today. We're going to try something a little different. And before we get into the discussion, we have a video from Markel that we're going to play. So I hope you'll all bear with us. Technology is always a bit of a question mark, but looking forward to it.
Introducing Markel Connect, our online portal that allows brokers to quote and bind business and digitally issue policy documents in minutes. Our registration process is simple. You can create an account in just a few clicks. No insurance contracts required, and promptly begin submitting business through our short, user-friendly application process. Brokers love Markel Connect. Our simple underwriting guidelines will allow you to assess whether your client's business is a fit. After that, you can move forward with our easy-to-use binding and issuing process. Oh yeah, and did we mention all policies bound with Markel Connect offer a 25% commission. Markel Connect currently offers online insurance solutions for small business professional liability, management liability, and commercial office spaces. We offer bolt-on products, endorsements, and have online renewal capabilities. Markel Connect is available 24/7 in all Canadian provinces and has bilingual capabilities for brokers residing in Quebec and New Brunswick. Start saving time and money by issuing your client's small business needs with Markel Connect. Your success is our success. That's the Markel Style.
I mean, that's great. I guess you can clearly see that digital distribution and facilitating ease of business with Markel is a priority, and that's great to see. Maybe just in terms of conversation, Dave, if I can start with you, can you tell us, I guess a bit of the background about Markel, its history and place in the Lloyd's market, and maybe, if I can go further, maybe as a follow-up, a little bit of the distinction, what's unique about Markel? Be great to hear.
Thanks, Mark, and welcome everyone. Thanks for taking the time to find out a bit more about Markel Canada. Markel Canada was one of Markel Corporation's first international ventures, but was sold to Fairfax Financial in 1985 as Markel was preparing to go public and wanted to streamline operations. And in fact, that sale marked Prem Watts' first ever investment in insurance. So you could say we helped start Fairfax. Well done us, nice going. After going public with a market cap of about $15 million US, Markel began to grow and in 2000 acquired Terra Nova Bermuda, and that marked the birth of Markel Syndicate 3000. The syndicate is managed, as Mark mentioned, by Markel International, which is headquartered in London. And in 2009, Markel International purchased the Canadian MGA named Elliott Special Risks, converted all underwritten policies to 100% Syndicate 3000 backed paper, and Markel Canada, in essence, was reborn. We became one of the founding components of Markel International's retail portfolio that we call National Markets. And now National Markets has grown to right over $500 million US in Canada, the UK, and Europe. While the original wholesale that formed the real nucleus of the Terra Nova and subsequent Markel syndicates writes well in excess of $1 billion US. Elliott Special Risks was established in 1966, and it grew to become one of the largest underwriters of environmental and excess and umbrella insurance in Canada. Markel transformed Elliott into a Lloyd's service company and a structure that more reflects a full-fledged insurer. We have local underwriting, we have local claims, finance, administration, and a high degree of autonomy. In 2015, we changed the name to Markel Canada, and in 2017, we purchased 50% of the Vancouver-based specialty MGA All Sport Marketing that we didn't already own, and now own 100% of that. Markel Corporation has grown to boast $46 billion US in assets. Our market capitalization, starting at $15 million in 1986, has grown to $18 billion. We have 67 offices in 20 countries, almost 19,000 employees, 4,600 of whom work in the insurance divisions, and we're number 335 on the Fortune 500. Markel Canada, having not grown significantly in the early years after acquisition, and more recently pausing to shrink a little bit after addressing some portfolio performance issues, has gone on to demonstrate robust growth. We're going to finish 2021 close to $200 million with over 100 staff in our branches in Vancouver, Montreal, and Toronto. We also have remote teams in Calgary, Ottawa, Hudson, and Charlottetown. Our strategy is one of commercial specialization with a particular bias toward long-tail liability, long-tail casualty lines. We have specialty sectors for what we call Markel Care, which addresses the needs of vulnerable individuals and groups, and Markel Play, where we're one of the largest companies focusing on sport, leisure, and recreation. We remain one of the 3 largest environmental underwriters in the Canadian market. And after significant re-underwriting in the past few years, we've once again grown to be one of the 10 or 12 largest excess and umbrella insurers in the country. We've also rapidly grown our professional and financial lines with a particular emphasis on primary and excess errors and omissions of all sorts, innovation in fintech, and other professional indemnity products. Our largest portfolio remains primary casualty, comprised of the sectors that I mentioned previously, other complex casualty risks with international exposure, challenging products, and coverages that a lot of markets may not wish to write or may shy away from, such as abuse. Nowhere in the world is Markel a major property market. Rather, we write property to support our casualty placements. And as you saw in the video, we've diversified our business by writing straightforward professional indemnity. We're going to write environmental and other smaller homogeneous risks on our fast and easy to use portal, while spending underwriter time on those risks that are more complex and are written in more of a traditional offer and acceptance style. I will note that the portal is growing at twice the rate of our overall portfolio, grew about 60% this year, and consistently gets the highest marks from broker users on our NPS surveys. We're planning to grow the Canadian operations by over 150%. It's actually 185% between now and the end of 2025 as part of a global push toward $10 billion in gross written premiums. That represents a CAGR to us of about 16.5%. So what you can anticipate from Markel in Canada is significant hiring, significant product development, new products, putting products online, underwriting and claims discipline and service, and a lot more proactive sales and marketing for years to come. Mark, you asked how we're different. I would say that what Markel boasts is a high degree of empowerment across our operations. Here, that includes significant in-country claim authority, local capability to address wordings, coverage, and rating opportunities. And with that comes a local understanding of Canadian market norms, the geography, political, and legal climates that impact us all, along with a very high degree of underwriting authority and autonomy. So what you have is a team that is vested in the success of our customers, our brokers, and our operation, who nonetheless have significant support from London and from elsewhere in the world. In terms of the syndicate, we also maintain very close ties with our wholesale team so that we ensure we don't send mixed messages, that our distinct appetites are clear, that we avoid any functional crossover that can lead to confusion for brokers and clients, and in some other cases has. We see that as the best of all possible worlds in that we act autonomously, we're governed appropriately, and supported internationally.
It's quite an amazing story, really, right? In terms of growth, both locally here in Canada and globally. And I think, your comments are really helpful, I guess, because I was thinking, are there really any benefits to dealing with London directly versus the Markel Service Company here in Canada? I think you kind of addressed that, but anything else that you wanted to add on that?
I can be a little cheeky. For the lines of business that we write in Canada, no, there's no benefit to dealing with Markel in the UK. In fact, local brokers could be paying a London broker commission or otherwise impacting their net to write business that we could write here. And we do think we boast significant authority, autonomy, ability to adapt wordings, and we have some local services that are very unique either to our segments or to the products that we offer. Where there is a benefit is those lines within wholesale's appetite that aren't within ours here in Canada, such things as equine, energy, marine, and some other exposures. But I will note, our wholesale operation has capabilities to write things like war and terrorism and trade credit. Markel Canada facilitates those lines of business as well on an as-needed basis so that the brokers here can have access to Markel in the UK, but again, don't have to worry about additional costs or hassle of working with a London broker.
Sounds like the best of both worlds, really. So that's great. Appreciate the extra clarity on that. Maybe Jennifer, if I could turn to you and maybe a bit of discussion always on the underwriting side. As we close in on the end of 2021, wondering if you can give us some ideas on how Markel has performed in Canada, and I guess because we are literally sort of on the doorstep of December, maybe as importantly, what's the plan for 2022 as you look forward? Areas that, for plan for growth and so on, like Dave mentioned. I'm sure people would be interested to hear a bit about that. Oh, Jennifer, I think you're on mute. Sorry. There you go.
It wouldn't be a WebEx without saying you're on mute. Good morning, everyone. Well, Dave definitely covered where we have come from and where we're looking forward to, and we're all in planning season right now, looking forward to 2022, but we're really focused on the incremental steps towards 2025 and that growth that Dave spoke about. And it really is all about sustainable long-tail casualty continuing to be our focus, and to be technical experts in what we choose to play in. And those sectors will continue to develop both organically with business we currently have on the books, and we can expand on a multi-product basis. So having expertise, dealing with one underwriter on a single policy basis, that's where we're looking to grow, be all things to all people. Those things will also expand our footprint in environmental, professional lines, and excess and umbrella. So our foundations will continue to sustain us. I would highlight property will complement that We're not focusing on standalone property, but for those areas where we do have sector expertise, we would offer the properties to support that, knowing that that is something brokers rely on, a single place to shop. We're pretty transparent at Markel about what we will not write, because oftentimes there's where should I go with this business? That transparency is really in our DNA. It's the focus of our website, our conversations day to day. And so to say where we would not write is super important as well. And that speaks to our results. We don't make those decisions lightly, where not to play and to write and to consider. And we've come out of 2 and 3 years of some pretty challenging results. So we share those results. We explain why we would not write roofing, cannabis, golf courses, long-term care, pro sports, and trucking, the magical word of trucking. So being in the market for umbrella and excess since 1966, the last 5 years been very challenging for the entire Canadian marketplace with trucking. That is not our focus, and we want to get that word on the street, because we were usually known as a market where long-term trucking could be taken ESR. So that continues to not be our focus based on the results. Those results are not unique to Markel. That is an industry-wide results for trucking. So growth will be specialty casualty sectors and the services that go along with that.
Jennifer, that's really helpful. I appreciate it. And thank you. I mean, it is sometimes an odd question, but important for people to understand what you're not interested in as well. So thanks for sharing that. Maybe when we go from underwriting to claims, and Jeff, if I can pose to you, can you talk to us a little bit about Markel's claims strategy in Canada? What are the key trends that Markel is watching for, and what are you looking to sort of proactively address going forward?
Sure. Thanks, Mark. I guess just to speak to our claim strategy in Canada first, I mean, our strategy really focuses and is centered around the customer and creating the most smooth and efficient claims process as possible. And we're also a company that strives for constant improvement. So we regularly engage our customers with respect to their claims experience through net promoter score surveys. And we consistently rank high on those surveys, which is great, but they also reveal areas that we can always improve on. So we always strive for that. With respect to our customer-focused approach to claims handling, one aspect of that is with respect to our approach to coverage. So we definitely look for ways to pay claims as opposed to looking for ways to avoid paying claims. And we really restrict who has authority to deny coverage. There's only one person in Canada that has authority to deny coverage. And that's our head of claims, myself. On any claim, examiners are tasked with trying to find a way to pay a claim. If it is truly not covered, then a referral will be sent to me to deny coverage. With respect to claim trends, I mean, that's one of the most crucial roles of the claims department is to continuously communicate trends, not just to our underwriters, but to actuaries, and also our sales and marketing team. It's important to be communicating trends that we want to avoid, but also aspect of trends. How are our policies responding to different litigation trends in the marketplace? Whether it's trends around waiver developments, which are key interest for our sports sector and where we're often making case law in that area, social inflation, or just general legal developments. One of the trends that's really top of mind right now is with respect to the pandemic and the impact that the pandemic is having, not direct claims, but the impact it's having on the litigation process, on the claims process, in particular around expert retention. We're seeing delays in our ability to get, medical legal reports, in-person medical assessments, on-site forensic investigations. And it might seem like a small aspect, but this aspect is creating some backlog. It's creating some delays in our ability to evaluate claims. And so we're communicating this to our actuaries and underwriters that we could see distortion in development patterns. And also, even on the sales and marketing side, this is creating a false perception to the market that our current claim experience is perhaps, better than it actually is. And we'll see a delayed development pattern coming out of that. So it's important to have constant engagement with all of our stakeholders around the various claim trends. So that's a key aspect of our department.
I appreciate that. I mean, your comments on being the only person who can actually deny a claim in Canada, I don't think I've ever quite heard it work quite like that. That's pretty unique. So I think probably people would say congratulations on implementing a strategy that kind of turns things around a little bit, but well done. So maybe after hearing from you and Jen, maybe I can pose, I guess, a question to the both of you, so to kind of hear from both sides of the house. But when you think about maybe the opportunities and still some challenges for Markel, but the whole market as the Canadian economy and our society begins to cautiously exit the pandemic, can you talk maybe a bit about that, if I can ask?
I'll just speak briefly just while I'm on mute. Again, I think one of the challenges will be around the market perception of the current claim environment and the trends we're seeing. We definitely saw a reduction in claim activity. It coupled with the hardening of the market, which has allowed us to get the rate we need, but I think we still need to maintain that rate, and I'm hoping the market doesn't respond and overreact to this benign claim activity that we've had recently. So that's the one area that I think I'd be concerned about. I'll turn things over to Jen.
Jen, did you have any comments you wanted to provide?
Okay.
Yep.
I'm glitching here. If everyone can hear me, if you just put a thumbs
Yeah.
up, Jeff. Hi.
Go ahead, please.
Can you hear me now? Okay.
Yep.
Hi. The challenges, I agree with Jeff on claims, and we are in lockstep with that as we look at each quarterly result to see actual versus expected and delay in response. But for us, it's that active portfolio management, proactively, not reactively, looking at our data internally and externally to say, well, this is how COVID came through our book as it developed as a pandemic. The exposures developed, clarity in contract language became the forefront of that. Actually, we took that as an opportunity to really showcase how we are transparent in our business of what we think our wording would do and where we think it's going to be going. And that actually was an opportunity for us to showcase how we just want to talk through the realities of what people have purchased. That going forward is going to continue to be how we will approach the business with looking at the portfolios monthly, quarterly, with claims and actuary to make sure that those emerging risks, those unintended consequences of what we've seen in a slowdown, how will they come back now online? And it is a very different world, as we can all agree, and to know that the actual contract language matters in that. Aside from the data, that's the focus of underwriting, and we were super proud to be very early adopters of being clear in that coverage, because we think it's important people know what they're buying in the event of a claim.
I think those words echo very true, Jennifer. I think any effort to simplify our products, make sure that our clients and broker partners understand the coverage they're really transacting is critically important. So I absolutely agree on all of those fronts. Maybe, based on some of the comments you just made, if we transition a bit to transformation, Jeff Sutton, maybe it's a good opportunity to bring you in here. Certainly in recent years, technology has transformed the way we do business. And I think we'd all agree the current work environment that we've been living under has accelerated many aspects of that transformation. Can you offer some insights on the impact of technology on distribution in particular, especially from obviously Markel's perspective of value and the cost of distribution?
Thanks, Mike. I'm Mark. And sorry about that. And good morning, everyone. Yeah, I think there's been a tremendous amount of transformation. We're witnessing it right now, right? I'm clearly working from home, and there are others on the executive team that are either in the office or working from their home environment. And it certainly is not foreign to anybody that's joining this call. It's something that we've been living with. I think before my arrival at Markel back in September of 2020, that transformation was well underway with many markets, with the way in which brokers were looking to work with their clients and then work with their carriers. I think we're no different in that regard, but as we saw from the initial video, we're trying to find different ways in which we can make it easier to do business with us and align with where there's a need in the marketplace. Our portal, as Dave alluded to early on, has been highly accepted and continues to grow. And we have products they're focused on professional indemnity, and we're going to be adding products that allow us to then bring in more offerings that are already well within our wheelhouse, well within appetite, that allow a broker, which is our distribution channel in Canada, to go on, to quote, to bind, and to have policies issued very quickly. We are an open market. You do not require a contract to work with Markel Canada. In fact, we have well over 600 different brokerages and thousands of brokers that currently work with us today. Our goal through technology is to make it even easier to work with us. Both Dave and Jen alluded to being transparent and candid with what our appetite is. Our website, markelinternational.ca, has an appetite tool that's right front and center. A couple of clicks easily identifies what's in appetite, where we have a strong desire to write a lot of that business. And in fact, we are looking to prioritize the business that is within appetite that gets submitted to us to drive that efficiency and make sure that we can then reward brokers that are bringing out that business that aligns with where we want to grow and be very responsive. The technology component is one piece, but certainly as we look to grow and achieve those ambitious targets for 2025, our plan is to do so in partnership with the brokers and broker partners we've been working with. There are a number of different initiatives that are underway as we continue to evolve and as we believe we bring something unique to the marketplace. Certainly the online Markel portal is one of those aspects. Being transparent and candid with our appetite tool is another. I think we'll continue to evolve, and we're looking for ways in which we can drive machine learning, automation, RPA in the submission process so that we can then prioritize and ensure that, as Jen alluded to, the expertise that we have within our underwriters are prioritized to the risks that we want, and that we can then reward those brokers and get responses back to them as quickly as possible, which has been a challenge for the last 18 months. And we want to make sure that working with Markel Canada is something that's easy to do. Technology will facilitate that, but I think ultimately our core of transparency, openness, I think is leading our growth.
Sense. So Jeff, stay with me for a second, and I'm gonna maybe ask Jen to also comment on this next question. A bit broad, but what do you both, what are your thoughts about the future of the Canadian insurance marketplace then? And then maybe, try and narrow that a little bit as a follow-up. Obviously, the market has gone through some very tough periods, kind of both tough for carriers and results and tougher now on clients as well. But I guess, how does Markel fare through that, and what do you see coming next?
It's really interesting. I think depending on the day, you can pick articles that will tell you that the market is softening at a much faster pace, and others that talk about the lack of capacity or the need for increased rate in different lines. I think our perspective is one, and I'll go back to that transparency piece. We want to continue to foster relationships with our broker partners where we can be very clear as to the direction we need to move on certain lines and with certain accounts. At the same time, we want to make sure that we're protecting strong relationships that have been in place for a very long period of time. I think it's also worth noting, this group was together about a month ago to start preparing for what a transition market might look like. And what are steps that we need to be communicating both internally and externally as we look to transition through that process, whatever it may be. I think our ability to be candid, transparent, as well as provide those technology tools that make it easier to do business with us will help us through whatever that transition looks like. That's a little bit of a fluffy answer, and so I'll allow Jen to deliver more of the hardcore pieces. I mean, do we crystal ball it, Mark? I don't really know.
That's not exactly the soft handoff I'm sure Jennifer was looking for, but over to you.
You can tell we laugh a lot together, which is part of this team's approach. And we test each other on that. And I will always go back to the data. I will, to be able to form that appetite and communicate it clearly, we have to be confident in what we write and why. And so it's just foundational consistency approaching that. And David spoke to, you talked about the introduction of WebSure and IT and data. We spend an enormous amount of time being able to say we're confident in what we've chosen to do. And I think as the market is what it is today, capacity shortage, inflation, social inflation, environmental, all of those things, we have to be, what is the exposures that we are faced with? How much money do we have to charge to take them? And how can we best service them in the event of a claim? And so when it comes to whatever the market will be, when it will change, and we know that it will, we have to be confident in we will stay in this market or we will depart, and we will be clear and we will be timely. But we'll always offer an explanation. And it's, this market, whether we were working from home or not, has been very challenging with respect to timing. And we all have to be focused on our clients and what that means to their business. And that's what really drives the decisions that we make, and being able to articulate it over an appropriate amount of time in fairness to our clients. Portfolio management, you hear those words, what does it really mean? Can you break down your business to its component parts and assess whether they are what you expected them to be, and if they're not, where you need to take them? And that underwriting piece is not only the numbers, it's the language. Making sure that actuaries understand the language and that contract wordings actually reflect the rate. That's if you're not on top of that, then you can't steer.
That makes perfect sense. And comments around communication are always critical, but never more so than in times of change and uncertainty. So I think all of that rings really true. I'm sure all of your partners appreciate those approaches. Jennifer, why don't we talk about one of the other really big topics out there, the world just came out of COP26. If there was an ability to focus even more on climate and sustainability than we have, it seems like we're doing that now. So when you think about the focus on sustainability and supporting the transition to net zero, how does Markel approach its ESG initiatives and the role that you as part of Markel, I guess, in Canada and internationally want to play? Do you want to speak to a little bit on that for us?
ESG. So there are 3 letters there, climate change being one of them, with environmental, which I can speak to. But I would also like to talk about S, societal.
Yeah.
So ESG, it really dovetails with how Markel approaches our business today. So it is the acronym that we're all referring to. It's current, but it is how Markel approaches its business, because we work with a forever mindset, right? We appreciate all the cumulative things that we do and the result that will bring us over time. That's just in our DNA. And that means our day-to-day actions are balanced with that long-term view as we build the company. So when we think about where we are today with climate change, with Scotland, right? This is very front of mind in the UK. We think, where will the business be going? We don't think about where it's at currently, that long-term view. And as companies incorporate ESG into their corporate frameworks, Governments with their green stimulus packages are expected to accelerate everyone's appetite for renewable energy. So we will continue to support, if not improve our support of that renewable energy. And that's the flip on the environmental piece, not the what not. And that emerging risk or current risk of climate change and carbon and drilling and thermal coal and all those words we throw around, but where will it be going? You know, how can we support that it gets better with the build that we're all focused on now, pushing towards lower carbon emissions? Teams are being built, if not improved, with respect to that renewable to build that out, to be alongside of that, to make that change. But societal, like the S part of that, we have not talked about the Markel Style on this call yet today, that it's pretty foundational to how, not what we do, but how we do it. And we really are working hard internally on our brand when it comes to that, to be able to let people know it's what we expect of our staff and how we interact with each other. And we have a corporate social responsibility we take very seriously. And internally, we've actually introduced new global communities. It's supported by leaders and employees around the world to garner that societal change. And we think these networks, they help our employee engagement. So when I hear ESG, I know it's very front of mind to talk about environmental, but I would say the S is just as important to our staff and what we bring to the marketplace.
I couldn't agree more, right? There absolutely is three initials in ESG, and understandable that environmental is garnering a lot of the attention now, and particularly in Canada, right, with an energy-focused economy. But you're absolutely right that the societal goals are absolutely imperative. Lloyd's has a long way to go on its journey as well. We recognize that. So very appreciative of the comments. I think that's really helpful. Thank you. Dave, I'm gonna come back to you because I think we're gonna maybe try and wrap up after this if we don't have anything else to talk about. But you know, as a leader for Markel in Canada, we would always love to hear your thoughts on, you know, I guess two sides of the same question. What keeps you up at night? But also, you know, what are you really excited about as well? So I will leave you with a very open canvas to give us some of your thoughts on that.
I'm going to be a little flippant here, and I'm going to say that with respect to the business we're building in Canada, very little keeps me up at night. As you've heard from a good part of the leadership, we have a team that is constantly increasing its professionalism, its development, its capabilities. We have a leadership team here and elsewhere around the country that's wholly committed to the success of our customers, our brokers, and ourselves. Jen mentioned the Markel Style. We always point people to that. It's a set of guiding principles that was written in the 1980s that we're still trying our best to live up to. And they're not just words on a wall. I've seen countless decisions made using the Markel Style as the guide. We're an empowered group. We're always looking for ways to do things better with an eye to great outcomes. So I feel pretty comfortable about the business. I sleep like a big overweight baby. I blame COVID for that last little bit. But what does concern me is the continuing polarization of, frankly, our planet. From politics to healthcare, education to business, I'm really concerned about the world that I'm leaving to my kids, and particularly to their kids that haven't even been born yet. Climate change to politics, we have this growing apparent, not inherent, inability of human beings to see and understand and accept other points of view, or to be in the least bit flexible. And that has to change. And that does impact our industry. You don't have to believe the science to agree that something is going on. British Columbia, where my teen kids live and I spend a quarter of my time, was on fire right until the moment that it flooded and that put the fires in. And they're getting whacked again today. Wildfires, atmospheric rivers, derricos, microbursts, a whole bunch of terminology that we're coming up with to say something we've never seen before, or something we saw once every 100 or 200 or 300 or 500 years. that we're seeing all the time. It's becoming routine, and routinely expensive. And, never mind that I haven't mentioned earthquakes and volcanoes and tsunamis and hurricanes. If we don't get cracking, if we don't listen to each other and consider substantial changes in our approach, I worry what will happen. And yes, I worry how our industry will cope if we've got enough money in the bank, if we are thinking about emerging risk in a way that is sensible for customers, but also sensible for what we're here to do and have been here to do since the Code of Hammurabi, which is allow human beings to take risk that we would not otherwise be able to take. We can't bankrupt ourselves. We can't bankrupt the world. We can't bankrupt our planet. So since that's not much of a high point to end on, I appreciate you saying kind of what I'm most excited about. What I'm most excited about, what does keep me up at night, is seeing the passion that this industry is starting to foment when it comes to really making change. The way we are talking about climate, the way we're not just tying it back to profit and saying, well, we want a combined under 90, but instead we're almost making it existential and taking steps to be the best industry we can, to, as Jeff mentioned, start embracing new technology, AI, robotic process engineering, that sort of thing, so that the human brains can spend time on the big problems rather than on paperwork or on frictional costs or on things that frankly don't add as much value as they used to. I used to joke that we say we're an innovative industry, and yet we still have documents, surety documents, know all men by these presents, that go back hundreds of years. It's great to remember history, but what I'm excited about is we're finally, as an industry, and particularly in Canada, where we're behind a few of the industries around the world, saying, how does that change our future? And rather than having that future shaped for us, we want to change it. 15 years ago, all we talked about is the banks. The banks are coming. Oh no, the banks are coming. Now we're not saying Google or Amazon's coming. We're saying, what are we going to do about it so that we make sure we're a part of the conversation and that we're meaningful to clients? We're not just thinking react, we're thinking proact. And I think that's incredibly exciting. And the brain power we have in this industry, we can make a difference.
Couldn't agree more. And I think those are fantastic final thoughts. There's a role for everyone in the industry, right? Be it carriers, brokers, EPAs, all of our community to make a difference in that regard. Big problems will be solved by many hands pitching in to do so. So Dave, thank you for that. That sort of brings us to the conclusion of our questions and what we had wanted to talk about. There have been some questions, and I'm highly appreciative of that, but it also seems like we've had a chance to address a lot of what people wanted to know. So of course, I would always encourage those listening, if they have questions, to reach out directly to any of the Markel leadership team. They are every bit as approachable, knowledgeable, and friendly as they appeared on the webinar. It's not just an act, I know. So please do contact them. I'd just like to take a second to say thank you to everyone for joining us today. We really appreciate people taking time. It's been a long year and a half of webinars and things. So when you come and join us still for these, we appreciate it. Always trying to bring you the best content. And I think hearing from the leadership of Markel in Canada certainly qualifies on that front. So thank you to David, to Jeff, and thank you to everyone. Apologies, just lost us there for a second. Jennifer as well, of course. And we look forward to everyone at our next Lloyd's Canada webinar. Thank you all so much. Bye-bye.